Morningstar's Tim Murphy joins us today to talk about the new LICs and ETF products that have come into the market. Tim, welcome back.
Thanks, Christine.
Tim, a number of big-name fund managers have recently launched LICs or listed investment company. What is the key driver behind this trend?
Yeah, it's certainly been interesting. As you said, a number of fund managers who traditionally played in the unlisted managed fund space, coming to the listed market with offerings recently. I think there's a couple of reasons behind that. I think firstly, and this is certainly the primary reason that the managers involved would tell you, is that the SMSF market is obviously growing quite strongly, and SMSFs generally haven't been big investors in managed funds, and so by creating a listed vehicle through issuing a listed investment company appeals possibly to more to that audience. I think the more cynical view might also be that fund managers have struggled generating meaningful inflows into their unlisted managed funds in recent years, and they've seen a bit of a trend into the listed investment company market, and they've seen that as a way of quickly growing some assets in the door. So I think there's both some investor merit to the investor type behind there, as well as some sort of more commercial reasons probably driving the activity you've seen.
Now, one of these fund managers, Perpetual, aims to report its NTA or net tangible asset at the end of each day. What is the benefit of this to investors?
Yeah, it really depends on your time frame. I mean, if you're investing in these things on a long-term view, then to be honest, it doesn't really make that much of a difference to you. That being said, we're certainly big fans of transparency, and certainly the greater transparency through issuing a daily NTA as opposed to weekly or monthly, as is more often the case elsewhere. That's certainly, it can only be good for investors. It's certainly not a bad thing.
Now, we've also had some activity in the ETF or exchange-traded fund space. Can you give us an idea about the new ETFs that have come into the market?
Yeah, so there's continued to be ETF growth. In the last couple of months, probably most of the new ETFs coming to market have been different flavours of global equities. We've seen a number of traditional market cap-based ETF indices tracking global markets come to market, from the likes of Vanguard. Another more interesting one, with a strategic beta focus to it, has been Market Vector's global quality ETF that's come to market. So tilting the portfolio stocks towards so-called higher quality stocks. That's certainly been an interesting discussion point in investing circles in the last couple of years, particularly the characteristics of those stocks tending to be lower beta or drawing down less in down markets. So the role that potentially plays for retirees and SMSFs is going to be interesting, and we'll be watching that one closely.
So Tim, what key factors should investors look at when assessing these new ETFs and LICs?
Well, you should always look at what's under the bonnet. As we say, firstly, obviously, if there's Morningstar research available, try and have a look at that for premium subscribers. We've obviously done a lot of the kicking under the bonnet for you where that's the case. If there isn't Morningstar research available on the particular investment you're looking at, certainly look at the holdings, look at the strategy, look at what it's trying to achieve, and consider whether what it's trying to do and its objectives are similar to what you're trying to achieve for your own portfolio and your own objectives.
Now, these LICs and ETFs cover a range of asset classes and countries and sectors. They're also touted as low cost. So can investors effectively build a whole portfolio using these listed investment products? Yeah,
you could certainly build a robust, diversified portfolio using ETFs and LICs. I think cost is certainly something to keep an eye on. As we've seen more LICs come to market, more ETFs come to market, the costs are becoming more variable. So many of the first players, particularly in the ETF space, cost was a big selling point. It's not as big a selling point for some of the newer flavours of ETFs coming to market. And similarly with some of the newer LICs, the management fees on those are more akin, in some cases, to their unlisted managed fund rivals, as opposed to some of the more traditional LICs that have been around for decades, who are certainly well known for their low costs.
Finally, Tim, do you expect more products in 2015?
There's always going to be new products coming to market, and I think ETFs are going to continue to grow. That's definitely a structural growth story. On the listed investment company side, maybe. I think it will depend on the market environment and how that plays out, whether markets stay strong and there still is appetite for new listings in that area. So one of those is probably a little bit more cyclical on the LIC side, so hard to tell. It will be somewhat market dependent, but on the ETF side, that really is a strong structural growth story, and you're going to continue to see more ETFs list on the ASX, into 2015 and beyond.
Tim, as always, thanks for your insights today.
No problems, Christine.